More tax law updates. The SALT tax deduction has had an update, and a lot of people still don't know the new numbers. If you're like me and you want to legally pay less tax, then you're going to want to stick around. SALT, state and local taxes. The numbers have been updated, and we want you to know what that could mean to you. Hi, I'm Coach Nick. Welcome back to another episode where we take really important components of our tax, estate, and financial planning life, and we make it simple, and we want you to be informed and knowledgeable about these things so you can make really important decisions about your retirement plans. Today, as we break down state and local taxes, or the SALT deduction, we want you to know the new numbers. The original numbers for the SALT tax deduction were limited under the Tax Cuts and Jobs Act, aka the Trump Tax Cuts 1.0, to a meagerly $10,000. That means if you were to add up all of your state and local taxes that you pay, including property taxes, you are limited to being able to deduct only $10,000. That really hurt our friends, family, and neighbors in these higher tax states such as New York, New Jersey, Connecticut, California. Your property taxes are through the roof there, and you are capped $10,000. Well, the numbers have been updated. The One Big Beautiful Bill Act expanded that $10,000 up to $40,000. Now, there's a lot of numbers we have to understand around that $40,000 and what it takes to qualify for that. Like in so much of our tax code, there are income phase-outs. And for the SALT tax deduction, the new phase-out number, if you're married filing jointly, modified adjusted gross income, $500,000 or more, you're entering into the phase-out. If you're under that $500,000 number, you can deduct up to that full $40,000, assuming you qualify. The good news is there are a lot of circumstances in our tax code where if you're in the phase-out, if you don't qualify for all of it, you qualify for none of it. It's an all or zero game that they're playing with us. That's not the case with the SALT tax deduction. If your income is $500,000 or above, you can still qualify for up to $10,000 of that SALT tax deduction. So in that way, it is better than other phase-outs where it really does go to zero. Like so many other things, timing matters, and we have to know our numbers before you start taking meaningful distributions out of your retirement accounts. It's really important to know your numbers. Are your CPA and financial guru, are they talking? Is the financial advisor laying out the game plan with the CPA? Are they working on your behalf to make sure that you're qualifying for as much as you can? You know, timing with this new tax code matters. It matters so much. To bunch our deductions in certain years, to do our Roth conversions in certain years. It's not one of those some games where we can be passive and just hope everything works out. Hope is certainly not a tax plan. We want to be mindful that we're getting all of the tax deductions we can, all the tax benefits we can. And the way that works best is when there's a collaborative approach where your CPA, your attorney, your financial person, they're all talking together. I can't emphasize this enough. That's something that the upper wealth of our country have really done well. They have a team of people all talking together for their benefit. And if you're that middle-class millionaire out there, you're that middle-class person that's accumulating wealth, or you're just about to enter retirement, let me tell you, one of the best things you could do is really have that collaborative team where the CPA, the attorney, the financial person, they're all talking together for your benefit. The SALT tax deduction is going to be meaningful for a lot of people. Now, this deduction might not last forever. With every new administration, we're going to see some updates to our tax law. However, while we can, let's fully utilize and fully participate in as many deductions as we can so we can legally pay less tax. Do you have questions? Are you wondering if you're doing everything you can to legally pay less tax? Are you curious if there's something that you could do to fully participate in that $40,000 SALT tax deduction? Click the link below in the description, and we'd be glad to have a conversation. Until next time, stay coachable.
Investment advice offered through Merit Financial Group, LLC, a registered investment advisor.